we're staying on a roll, talking to companies that have reported earnings, and Samvardhana Motherson is the next that we're focusing on. They've reported a steady profit growth in the third quarter, though margin pressure persists in key verticals like wiring harness. Emerging businesses are driving revenue momentum. Take a look at this conversation that Puneet has had with the management. Puneet, start by setting up the context for us.
Well, thank you for that. It's probably the first quarter where we've actually seen a meaningful margin expansion for Samvardhana Motherson. It's also visible. The efforts that have gone into the company over the last few quarters finally seems to have turned around the corner. The other aspect is of revenue growth as well. In this particular quarter, quite strong. And the management mentioned that while the global production for CVs as well as for passenger vehicle has been low, the company has been able to increase its wallet share with its customers, and hence the content per vehicle has also increased, and they seem to have been a big beneficiary of that. Now, the other aspect of what we want to focus on this conversation is, of course, of the India-EU FTA amongst others. But let me welcome in Pankaj Mittal, the whole-time director and president at the company, as well as Gandharv Tongia. He is the group CFO at Samvardhana Motherson. Gentlemen, thank you so much to both of you for joining in. Let me actually first start off with the India-EU FTA specifically. How do you see that effect for Samvardhana Motherson in that case? Because you're going to be having a lot of opportunity, but since you are the most integrated player at the local ground, what do you expect?
Thank you very much for having us on your show. The FTAs are very positive for the entire business, especially the European Union FTA, which has been announced earlier, which will take some time before the law passes and maybe become effective in the coming calendar year. The FTAs will lead to having a supply chain integration. Also, it will allow the finished products to come and move into different markets. So it opens a very large market for the European Union customers and suppliers from India to European Union, both ways. We see it as a very positive development. Having said that, Motherson has been having a policy of having manufacturing locally, close to the customer, which has allowed us to avoid logistic issues, currency issues, as well as supplying products which require proximity to the plants of the customer. So especially the painted parts, the in-sequence parts, the kind of business which we do, we have been doing it very close to the customer, and that has allowed us to function very, very efficiently with them.
But Mr. Mittal, this will also lead to more opportunities for the Indian auto component makers that are exporting currently to the European Union. Now, will that be also an opportunity, but also increasing in competition by the local Indian players because of this India-EU FTA?
See, as far as we are concerned, as I mentioned, that supply chain integrations, there are products which are also imported and exported both ways. So if you see some of the raw materials could be imported, the duties will go away. And similarly for child parts, especially smaller parts to flow in effectively, while the larger part, the full assemblies and painting and other things are happening very close to the customers, the opportunities will grow. So as the details unfold and it comes into a law, definitely it will improve the overall sentiment, and the markets becoming large also opens up more opportunities and more growth opportunities for everyone.
The other aspect is that, we've seen, globally, the global CV production, let me start off with that, has been actually down 13% in this particular quarter. Now, it was down almost 4% in quarter two, 1% in quarter one. So it's not been a good start or the last 3 quarters for CV specifically. Do you think that we are at that stage where a turnaround could happen, and what are the factors that could lead to it?
Yes, the CV market has been quite weak, especially in the United States. So the North American market came down by about 20+%, around 27%. And the European market had also been weaker. But as we move forward, the markets are coming up, especially the American market with the EPA 27 norms, which were supposed to come in. There were talks that they may not come in and there may not be any pre-buy. And that was a reason for the market to suddenly become weaker. But now, again, there is a discussion and there are very positive developments going on, which indicate much better volumes in the coming 6 months to 9 months as we move forward quarter on quarter, what we see as forecast from the customer. So we hear much better information from the market that there will be positive developments in terms of the volume requirements.
Also, Mr. Mittal, we've seen a couple of notable changes in your presentation. One has been on slide 13, where you want to be a global demand player. Now that's across design, engineering, manufacturing, assembly. Now logistics has been added to that vertical. Earlier an emerging business. So could you is that something that I'm seeing too much into it, or could you give us some perspective on what's the reason for that?
Yes, we do want to address logistics also, because as a global manufacturer and a global supplier, logistics is a key element to be able to provide services to the customers. And we are not only doing logistics for ourselves to make our products reachable to the customers, but we are also working for our customers to enhance their logistics efficiencies. And in that light, you would have also seen our partnerships, especially in India also, in terms of a RoRo facility, which we had signed up, which will have a very good capacity for handling the exports of the vehicles made in India at the ports. So it's a direction in which we all have been moving. We have had packaging joint ventures. We have moved into logistics. So not just being a manufacturer with full design engineering, manufacturing and assembly capabilities, but also of logistics give us more firepower to become more and more efficient and become a trusted partner for our customers globally.
The other aspect is that, at a time where we are seeing global auto demand actually subside, you've announced 2 new Greenfield plants for automotive in emerging markets. Is that largely a reason of new orders from customers or getting closer to them in regions where you're actually seeing growth at a time where it's been quite weak globally?
So thank you very much for asking this question, because we have been investing in the emerging markets as well as also our emerging businesses. So first, coming to our emerging market and investing in these areas, most of our greenfields, 12 of them, are coming up in India, in UAE, in Poland, and in Morocco. So these are the markets where we saw the volumes coming up, and also to provide services to our customers. So the Moroccan facilities are also being set up to strengthen the European footprint, which we already had. It will help us to do more volumes, as well as it will help us to ensure that we remain cost competitive in terms of overall efficiency of the products which are being serviced.
Mr. Kandar, let me also welcome you into this conversation, because commodity as a basket has been very volatile. It's a key raw material for all auto and auto component makers. Are you still going on with a lag of a quarter, essentially passing on that cost to the customers, as well as have you already received the commodity costs that were passed on in Q2 in this particular quarter?
You're absolutely right. In our business, generally the movement in commodity prices are passed on to end customer, albeit with a time lag of a quarter or 2 months. And as you would have noticed, this was the best ever quarterly top-line performance in the history of the company, which is a true reflection as well as reaffirmation of our demo capabilities. The margins have improved overall sequentially. And as we had announced in our last year's investors communication, that we are thriving and striving to get to $108 billion top line with growth of 40%. So improvement in margin, better utilization, working capital efficiencies, all these will help us in improving our growth over the years.
Let me also just, go into your non-auto business, the consumer electronic part, and you mentioned specifically on capacity that you're on track to achieve the annual run rate of almost 16 million units by the end of FY26. So the question largely been that how much of it you've already achieved in these 3 quarters, if not a direct number, some qualitative highlights that you can provide.
So this business as well as aero business is housed under emerging businesses. The emerging business has registered a top line growth of 57%. A majority of the growth in this year as far as this business has come from these two businesses, as well as from the first time consolidation of a new acquisition which was done in the last year. We have not disclosed specifically these businesses, but you are right, the capacity expansion is on its way, and we should be able to register a fair amount of growth in times to come in both these businesses.
Just as we wrap up this conversation, Mr. Mittal, just a final word on what are some of the key expectations that we should build in for FY27. I know we're expecting Q4 also to be a decent performance, but largely with what we are seeing weakness across China in the luxury markets, the global competitive intensity being increased across tariffs amongst other factors, what is the expectations for you?
See, Motherson has focused on a very de-risking policy of 3CX15. And with that, we have been present in all different markets. And mostly our products have been powertrain agnostic. And that is why you would have seen that we have maintained consistently good performance. Wherever needed, we have done transformations. So like in our polymer business in Europe, we transformed to be able to give very good performance. So we remain geared up to handle the changes which have been happening in the market. Having said that, the forecasts which we have show that the overall vehicle production will remain robust in the next year. You're right that there will be challenges, and we all will have to overcome those challenges. But these challenges also throw a lot of opportunities for Motherson because we have been an acquisitive company. Customers have time and again given us the opportunities to acquire those where they felt that these companies need to exist, where we can bring in good management and help them to become normal and become a good, consistent supplier to them. So we do see that there is a good future, very good outlook as we move forward.
Well, Mr. Gandharv as well as Mr. Mittal, thanks so much for joining in, giving us time here at NDTV Profit. Look forward to our next conversation, sirs.